All right, well, let me introduce myself. If this is your first time here, my name is Bailey Parker. I am the Communications Director here at the South Carolina Department of Consumer Affairs, and this is one of my favorite parts of the job. So at Consumer Affairs, we regulate a lot of credit-related industries in South Carolina, so we often talk about credit, which is why we are talking on this topic today. And just to kind of give you a quick overview real quick, I'm not an attorney. You don't want to take legal advice from me. It'd be really bad advice. This presentation is not meant to serve as a substitute as seeking legal counsel on your own or otherwise seeking department guidance or interpretations on any laws or interpretations of laws. I don't think we're going to be speaking about any specific laws today. This is just merely serving as an introduction and overview of the topic. All right, let's dive into what we all came here today. So let's start off with the basics of credit reports. So credit reports and scores, what are the difference? They're heavily involved with each other, right? But there is a difference because some people think they're the same thing. They're not. They're actually separate from each other. When you go to request a credit report, oftentimes it does not come with a score, and some people can be confused by that. So credit reports reflect your credit activity, and that's everything that you're doing on your credit accounts. And credit is everything that you are borrowing. So whether that's a credit card or a loan of some type, it could be a mortgage, or it could be a car loan, it could be a personal loan, it could be any other type of credit that you are borrowing with the intent that the company has that you're going to pay it back at some point. That's a type of credit. Also a credit report, and we'll go into detail about this in just a second, also shows a lot of personal details about you, including your utility payments. It also reflects cell phone payments, other items on there that didn't used to be on there. Credit scores are a representation and a calculation of that activity on your credit report. So the score is then calculated of your activity from the credit report. You can't have a score if you don't have any activity on that credit report. So if you're a minor and you have no activity on your credit report, if you're under the age of 16, and a lot of people will say, well, wait, can't you be a minor and be the age of 17? Credit reports actually will start at the age of 16 often, because minors can get driver's licenses at the age of 16, which means they may be able to get a car loan or get their first car, their first cell phone at that age, which means their credit report would be created for the first time. But before that, credit reports would not be active, hopefully, for a minor. If a credit report was active for a minor before that time, it's most likely that they have been a victim of identity theft. They're a child identity theft victim. And they wouldn't have a credit score if they didn't have a credit report. But if you have credit activity, you will have a credit score. Now, the more credit activity you have, the more solid a score you'll have. So we'll get more into that. So what is a credit report in more detail? It's a detailed record of how you've managed your credit over time. What is all of the information on your credit report? So there's three major credit reporting agencies that we are going to talk about today. That does not mean that there aren't other credit reporting agencies. There are others. In fact, there's dozens more. You're just not going to hear about them very often. They're very niche. you're most likely not going to have to worry about them. The ones that you're going to have to worry about are Experian, TransUnion, and Equifax. They're going to get information from creditors and public records. They're going to compile that information and they're going to put it into a credit report. So this is what it could look like. This is obviously not what your official credit report is going to look like. This is just a very rudimentary version of what it could look like. So this is the personal information section of your credit report. Your name and any name you may have used in the past will be on there. So if you are a female who's married and had a maiden name, so me, my maiden name, Parker, is my married name. My maiden name will be on there. So any name I've used in the past will be on there, including my current name. Current and former addresses, birth date, your full social security number, your current and previous phone numbers will be on there. Next will be credit accounts. Current and past credit accounts, including the type of account. So type of account would be, this is a credit card account, this is a personal loan, so it'll differentiate. The credit limit or the amount. So what's the limit or amount mean? That means how much you can spend on that. If it's a credit card, you have a limit that you can spend. So say you open up that credit card, you can't just spend and spend and spend and spend and spend and have an unlimited amount, unless you have, you know, you're ultimately a very rich person and a very special human being who has the black card, the myth of the special credit card that is the black card. But the credit limit would be, say, $5,000. If you max out your credit card at $5,000, that's your limit. You can't spend any over that. If you do spend over it and they allow you to spend over it, they're most likely going to charge you for it. Your account balance is going to be how much you've spent of that limit. So if you've maxed out that $5,000, your balance is $5,000. Account payment history. Every payment you've made or not made will be there. So every payment, including the date and the exact amount, will be on there. Your credit report's gonna be long, just to let you know. It should be detailed. The date the account was opened and or closed. So if it's still active and open, so difference between an open and closed account. Say it was a car loan that you paid off. That could be a closed account that's still showing on your account because it's still within the statute of limitations, meaning it's on there still. But your credit card account, it's still an active credit card, which means it's still active and open, and you're still making payments and you're still using it. That's the difference. And they will both show when they were opened. And then that car loan that you paid off will show open and when it was closed or paid off. And then it will say the name of the creditor. So say your car loan was from cars.com. I don't know. And then your credit card was from Capital One. It'll say who the creditor was from. Public records. So if you have any tax liens on your name, if you have any civil suits or judgments, or you have any bankruptcies. So these are the ones when we talk about statute of limitations. These are the things that statute of limitations means how long things can stay on your credit report. So when you file for bankruptcy, bankruptcy is the thing that can stay on your credit report for the longest amount of time. And we'll talk more about how this will influence your credit score later. But a bankruptcy can stay on your credit report for 10 years. 10 years is the minimum amount of time. So that will stay on there. That's the statute of limitations there. Inquiries. This can be a complicated thing to understand. So if If you're confused about this, don't hesitate to put it in the questions box. Hard and soft inquiries. So hard inquiries are when you apply for credit. You put in all of your information and you accept it. So not just you apply for the pre-approval, because I'm sure, just like I do, get plenty of mail in my actual mailbox and my email box saying, you've been pre-approved, click here to see your offer. That is a soft inquiry. They've checked your current credit report. That isn't a hard inquiry. That doesn't affect your credit score. A hard inquiry does affect your credit score because you're accepting that credit. That means it's going on your credit report and it's affecting your balances, it's affecting your limits, all of that. So that's the difference between soft and hard. Soft, they're just looking at your credit report, and based on the information on your credit report, they're making you an offer, but you're not accepting. The moment you say, yeah, I like that offer, and you say accept and goes through the whole process, that's a hard inquiry. Hopefully that makes sense. So how is your credit report used? So it's used for, oh my gosh, so much these days. I don't think people realize that it's used for way more than it used to be. So credits pulled by creditors and a lot of other businesses now, when you apply to, most commonly thought by buying a home or buying a car or borrowing money, like getting a personal loan or getting a credit card. Those are the more obvious ones, but now it's to set up a utility account, to get a job for certain jobs. Like say you want to work at a bank, or it's a job where you have to handle money. They're probably going to check your credit report. A lot of government jobs will check your credit report now. Renting an apartment, they're going to check your credit report. Buying insurance of some type, whether that's car insurance or home insurance, they're probably going to check your credit report. Cell phones, they're going to check your credit reports. Really? There's so many times now where your credit report is going to be looked at. Why are they doing this? This is the most common question that I get of like, well, why? Why to set up a utility account? Like I bought a house or I rented an apartment and they checked my credit for that. And I need to get gas for my house. I need to get electricity for my house. Why did they need to check my credit for that? They just did. That's what they do. They want to see if you're going to pay your bills. They want to see what they're getting into. And they do it. And you kind of have to do it too, because you need power, right? So you have to sign to let them check your credit. So just know what you're getting into, that they're checking your credit now for pretty much everything. Well, how do you get it? Because you want to know what's on there, right? The place that Consumer Affairs is going to tell you to go, we're not going to tell you to go anywhere else other than annualcreditreport.com. You can do it online. I'd say that's the easiest and probably safest way to do it is annualcreditreport.com. Just make sure you're using a secure connection to do so. Don't go to Starbucks and use their free Wi-Fi to get your credit report, okay? Don't do that. Make sure you're on a secure server, a secure Wi-Fi connection, or a secure internet connection to get your report. Or you can call and request your free credit reports, and they'll send them to you in the mail, or they can send them to you to your email also. You can get them for free once every year from each of the major credit reporting agencies, Experian, TransUnion, and Equifax. They are offering one per week until the end of the year, one free per week until the end of the year. Just because of the pandemic, they've been doing this since I think it was May of 2020. It's going to expire January 1 of 2023. I'm not saying you need to check your credit report every single week until the end of the year, but take advantage of the fact that you can check your credit report multiple times before the end of the year for free if you haven't done it. And this is where my next poll comes up. I'd like to know, when was the last time you checked your credit report? Within the last 3 months, within the last 6 months, within the last year? And honestly, I don't remember. And again, the answers are anonymous. You're not going to be called out here. And while you're answering this question, I just want to talk about the importance of doing this. This isn't just so you know what's on your credit report. That's very important. But this is the #1 way to identify whether you've been a victim of identity theft. I mentioned earlier, identity theft and credit reports go hand in hand. This is the way that you can find out if you have been a victim. If there's any suspicious activity on here, you know that something's been going on. All right, so the majority of people have voted. Oh, guys, you're breaking my heart. Oh, no. Oh, no. Have you guys heard that? I don't know how many of you are on Instagram or TikTok, but there's this sound that goes, oh, no. Oh, no. This makes me so sad. 41% of you are breaking my heart with, honestly, I don't remember, but 33% of you are making me feel a little bit better, bolstering me up with within the last 3 months. 11% said within the last 6 months, and 15% of you said within the last year. So, I mean, the majority of you have checked within the last year, but 41% said, honestly, I don't remember. So, please, if you don't remember, check ASAP. Write down a note to yourself. Make it a priority to check your credit report, just so you know what's going on, just so you can make sure everything on there is accurate. Because what if something on there, even if you're not a victim of identity theft, heaven forbid, but what if it missed one of your on-time payments and that's what's affecting your credit score? What if that's one of the things that's bringing down your credit score? And you have something that you can show to the credit reporting agency to say, hey, I have a receipt here, or I have an email saying I made this payment and it's not showing. You have it showing as a missed payment, but I have proof. I got the receipts. So this is why you should always be monitoring your financial statements, always be monitoring your annual credit report.com. And the reason we're not going to tell you to go anywhere else is because annualcreditreport.com is authorized by federal law to not save any information put into their website, and they're not going to sell your information to third-party marketers. Almost every other site that offers you free credit reports is going to, in their terms and conditions, basically make you agree to sell your information to third-party marketers who are then going to send you pre-approvals, okay? So annualcreditreport.com does not do that because it's authorized by federal law not to. So this is the only place that we're going to tell you to do it. All right, credit scores. So this is what everybody came here for, right? But we got to get through the credit reports to get to the good stuff. What is a credit score? So a credit score is a 3-digit number designed to predict if you're going to pay your bills on time. That's the long and short of it. A higher credit score, generally, in the eyes of creditors anyways, results in better credit terms and more options, because a creditor is going to see a higher credit score and say, oh, okay, that means they're more likely to pay their bills on time. So this is a general credit score range based on the FICO numbers. We'll talk about that like in the next 2 slides, because there's 2 different ranges, Vantage and FICO. FICO is used in the majority of lending. So this is the FICO range. Now, these are general numbers, not strict representations of every score range, but anything over 740 is considered very good. If you are above 700, it's considered a good credit score. So I said there's different types of credit scores here. So these are the two top credit scores used, but really top dog here is FICO. FICO ranges between 300 and 850. Vantage is 501 to 990. FICO, I said it's top dog. It's used in 90% of credit granting. Credit granting being when you're applying for some type of credit, the score that that creditor is using is 90% of the time FICO. And you can, unfortunately, have multiple FICO scores. Why? Why can't I just have one score? I've asked myself this many times. Why do I have multiple scores? Here is a quote directly from FICO that I'll just generally paraphrase. So you can have more than one score. It depends on the type of credit that you're looking for. Your lender can evaluate your credit risk using different type of score calculations. So if you're looking for a car loan, often there's a calculation that's FICO auto scores. It's an industry-specific FICO score version that's been tailored specifically for auto dealers or automobile lenders. Most credit card companies, on the other hand, are using FICO bank card scores or the FICO Score 8. So they have different calculations for different lenders. So that's why you might have multiple scores. What would that actually look like? This is what it would look like. People say all the time, why do I see slightly different numbers on a day-to-day basis? It's totally normal. Don't freak out. If you see a 35-point difference from one day to another, it's totally normal, okay? I know it doesn't seem normal, but just take a deep breath and just say, you know what? I think we check our credit scores too often, and I think it's become too accessible in a way. Like when I mentioned earlier that you can see your credit report every single day until the end of the year for free. I don't think you should be checking your credit report every single day. There's no need to be doing it that much. And in fact, I think it's probably bad, right? Because it becomes a little bit like, oh, I'm so worried about it. Same thing with credit scores. I know with one of my credit cards, it'll give me an estimation of my credit score anytime I want. I just have to press a button and I can go in every day and it will give me a potentially different score every day because of this. So example, 726, you saw your credit score online provided by your credit card company, just like I said. And then another example, 698, you signed up for a separate free credit monitoring service at free. I say free because they're selling your information to third-party marketers. Nothing's free if they're making money off of you. And checked your score there. So I wasn't a math major in college. How about a 28-point difference there? And then 711, your auto lender showed you the credit score it used to evaluate your loan application. At any given moment, lenders are probably looking at different scores than the ones that you see. And it's okay. That 30-point to 35-point difference is totally okay. It's not going to make that big of a difference in the long run when it comes to your interest rate. And it most likely is just going to drive you insane if you keep looking every single day. So my advice is to not look every single day, okay? Because I used to be one of those people when I was building my credit in my mid-20s, and I was sitting there thinking like, I need a better credit score, I need a better credit score, so I'm going to check every single day. And it used to drive me insane. Don't do that. Don't be Bailey. Don't be mid-20s Bailey. What is my credit score made up of? The most important thing, hands down, is your payment history. 35% of your score is made up of your payment history. When people ask me, what can I do to improve my credit score? Pay your bills on time. That's it. There's no secret. I'm here to bust the myth that you can pay for some service to increase your credit score. And in fact, the credit reporting agencies are now hawking products to increase your credit scores. I'm not going to talk about the efficacy of those products. The most effective thing to increase your credit score is paying your bills on time and consistently. 30% is amounts owed. So basically the amount of the loans, so working down your loans. 15% is the length of credit history, so how long you've had credit. And then 10% at new credits, and then credit mix. So let's break this down. Payment history. This includes late payments, if you've made any late payments, if you have any collections accounts, charge-off accounts, bankruptcies, judgments or liens on your accounts. We talked about this when we were talking about our credit reports. This all plays a part in your payment history, which is why if you have a bankruptcy, this is going to hit you the hardest on your credit score. If you've got a judgment or a lien, anything, this is going to hit you the hardest. It's the unfortunate reality because it's going to make up such a huge portion of your credit score. And this is all time-based. So the older the information it is, the less it contributes to the score. I mentioned earlier the statute of limitations. So bankruptcies are 10 years statute of limitations. So the moment you file bankruptcy is the most it's going to affect your credit score. But the longer it's on your credit report, the less it will affect your credit score. So it's going to affect you the most at that 1 year mark. When you get to the 9 year mark, it's going to matter a lot less. So just know that. The amounts owed, pretty close to the bills paid. It's best to have several accounts with lower balances than to have fewer accounts that are maxed out. So this has to do with utilization, your credit utilization. I was not a math major in college. And this has to do with a little bit of math. So this is the homework that you have to do. Okay, I can't do this for you. Go into your accounts, into your credit accounts to figure out your utilization. What you're going to do is you're going to take your balance of every account, okay? Take your balance on one side, divide it by each of your limits. That's going to be your utilization. The recommendation is to have your utilization be lower than 10% per account or 10% overall over your whole report. That can be difficult. And you know what? Hard times happen. I know for my husband and I, after my first son was born, he was a NICU baby. And at the time, my husband was still in college and I was working in a nonprofit hospital. We were not making a lot of money. And so we had to put a lot of that debt on a credit card because we just didn't have $7,000 out of pocket, right? Do you think our credit utilization was below 10%? No. And luckily, because of the hospital payment plans, we were able to shift a lot of that debt onto hospital payment plans. But our credit utilization was bad for a while. And it happens, life happens, right? And we work through those moments. We made sure to pay every single one of our bills on time. That was a priority because you can still pay your bills on time because that was 35%. That's the most important. But yeah, was our credit utilization over 10%? Yeah, Yeah, it was. Okay. But the lower, the better. If you can't make it below 10%, if you're at 20, okay. If you just make it as low as you can. Make a goal for yourself. Just even if it's a goal of, hey, I want to lower it by 1% every month. Based on your goals and your financial situation, do what's best for you. Because I don't know your situation. I don't know what your financial goals are. Do what's best for you. Length of credit history. This one, honestly, even for me, I'm a 33-year-old woman who got her first credit card when she was 22 years old. I still do not have the ideal credit history, guys. I have 11 years of credit history. Do you know how long the ideal credit history is? 15 years. I still got 4 years to go. This is something that you just have to work through. The longer you maintain open accounts with creditors, the better. If you're struggling to establish a history, or even start, if you're struggling to start a history, a secure credit card is a good option. I know some credit unions offer secure credit cards. Now, the limits are lower. You're not going to have a $10,000 limit on a secure credit card. It may only be like my starter credit card. It was a secure credit card. It was $500. Okay. But it was good for me at 22. And I was learning how to use credit. So that might be a good option for you just to get started. Or you can become an authorized user on a family member or friend's card. Now, this is only in specific situations. That's not just, oh, hey, be added to somebody's account. That's not the same thing. You have to go into the bank and it has to be under your name, but then the other person is signing on to pay your bills in case you don't. So make sure you're signing up under the right account. And then new credit inquiries, we talked about the hard and soft inquiries. This can affect you. So if you start going out and applying, doing hard inquiries, you do like 6 of them at a time, yeah, that's going to affect your credit. Okay. You might see your credit drop 50, 60 points if all of a sudden you apply for 7 different credit cards at the same time. Probably don't do that. All right. Soft inquiries. This is not going to affect your credit score. What a soft inquiry would be is like shopping around. So say you're looking for a car loan. Consumer Affairs always tells consumers before you take the first offer of a interest rate on a car loan, shop around, go to a different dealer, go to a different lender and say, hey, this lender offered me this deal. Can you give me something better? See if they'll give you either the same or a better deal, because you never know what you're going to get. They could, just to get your business, give you a better interest rate. Or they might have, if it's a lender working with a dealer, they might have a different car that you like and give you a better deal. Shop around. It's in your best interest to, and those are soft inquiries. So a lot of times when you're shopping around, especially for those pre-approvals for like a car loan, those are seen as soft inquiries because they're just checking your credit to give you a pre-approval. And those are done around the same time, which means they're not counting against you. It's not until you say, oh yeah, I want that deal, I want that car, I want that loan. That's when it would be the hard inquiry, okay? When you accept one of the deals. And then credit mix. So this is when you are using different amounts or different types of credit. So you're using revolving accounts, installment accounts, you have an auto loan, you have a mortgage loan, you have a credit card, you have a personal loan, different types of accounts. You don't just have 16 credit cards open and that's it. Lenders might see that as a risk. They might say, well, why does this person only have like 10 credit cards and nothing else? That might be a little suspicious to them, and they might be more unwilling to give you the best offer. Okay, so here is an example of a credit score impact based on the negative information. So say you're 30 days delinquent on a payment. So you're late on a payment on your card. So there's Vantage over here, but I'm going to focus right here over FICO since the majority of us are going to be using FICO. So say you have a 780 score. What I want you to notice here is the higher your score is, the more you're going to drop. So if you're 30 days delinquent on your payment, you're going to drop up to 110 points. There is a myth that the first missed payment will affect you minimally. It won't affect you that much. That you'll just slowly go down. No, that's not true. The first missed payment hits you the hardest. So it's a hard drop, the first missed payment, and then you slowly go down. They penalize you the most that first missed payment. So that's why you really don't want to miss a payment. So you're going to drop that 100 points after that first missed payment. If you've got a 680, you're going to drop down to about a 600. If you have a foreclosure or a mortgage charge off, you're going to drop 140 to 160 points. And then if you have the 680, about 100, 110 points average. Filing bankruptcy, this is the hard one, the longest one to get rid of, 220 to 240 point drop. You're going to be going from 780 to about 560, 550, and then from 680 to about 550 there too. So just know that the higher your score is, the farther you're going to drop. And that first missed payment isn't just a small drop, it's the bigger drop. So how do I boost my score? I kind of already gave away the secret. So how do you improve your credit score? This is how you start. You got to pay your bills, even if that means making the minimum payment. When I speak to consumers, it's I can't pay my bills. Call your creditors. You need to be your number one advocate here. Do not be afraid to call your creditor and ask them, hey, I want to pay my bills. I'm in this financial situation right now, whether it's I lost my job or I had a health situation, because the majority of credit card debt is actually health debt. And I want to pay my bills, but for the next 3 months, 6 months, whatever it may be, negotiate with them and say, can my minimum payment be this instead of the $50 a month? Most creditors are willing to work with consumers. They want some money. They're willing to take some money over no money, okay? Now, get everything in writing. Get emails from them if you can, or some sort of written contract if you can from them, if you come up with a negotiated payment difference. But do not be afraid to call your creditors if you can't make the full payment. But pay your bills on time, even if it means only making the minimum payment. Because yes, if you're only making the minimum payment, does it mean that you are gaining interest on, say, a credit card? Yes, but it means that you also are keeping your credit score maintained. Applications, keeping those applications low. Do not go out and apply for 10 credit cards at the same time. It's going to affect your credit score, okay? When you directly apply for credit cards, that is a hard pull. That's a hard application, a hard inquiry. When you get those letters in the mail for the pre-approval, that's a soft inquiry. But the moment you accept it, That's the hard pull, the hard inquiry. Your credit history. This is when you need to pull your credit report and make sure everything's accurate. Go through your financial information. Go through all of your credit report, compare it to all of your payment history, make sure everything's lining up, okay? And try and pay down those limits as much as you can. I mentioned earlier, I don't know your financial situation, but make financial goals that you can meet or that are good for you to bring those limits down. Whether it's, okay, I'm going to start bringing my limits down by 1% every month. If you can start bringing those limits down below 10%, great, do it. That's how your credit score is going to go up. Is this going to be my credit score is going to go up 100 points in 1 month? No, it's not. Anyone who tells you that is a liar. They're a scammer, okay? No one is going to be able to improve your credit score substantially in a short period of time. That's just not how credit scores work. It is a long game. It's going to take 6 months to a year to really see a significant difference in your credit score. I don't have another poll, so I don't know why that came up. This is when we get into the credit counseling. So we actually license credit counselors in the state of South Carolina. We've got about 10 minutes left, so I just want to cover this really quickly. Should you hire a credit counselor? Before you do anything, before you sign anything, I just want you to do these things. Are they licensed? This is the key thing here. You should never work with anyone who is not licensed. I know there are people out there that will say, oh no, it's fine. It's fine that I'm not licensed. I still provide the same. No, there are laws that need to be followed. There are max fees that can be charged when it comes to credit counseling. So you want to be working with somebody who is licensed. Credit counselors include debt managers, debt settlement and negotiation, and credit repair. People offering these services must be licensed in the state of South Carolina with us at the South Carolina Department of Consumer Affairs. If you find somebody who is not, please report them to us. To see if a counselor is licensed, you can go to our website. I'll show you real quick. So you can go to our credit counseling page and you'll find all of our licensees here. You can even search complaints here too. So you'll go to consumer resources. You can even go to money and credit. We have all of these great resources here. You can even find the documents, credit reports, what they are and why they matter, even a credit reports and scores demystified webinar that includes all the information about reports and scores there. If you're interested in that, man, guys, so much wonderful free resources on our website. Little plug for the website. But you can search complaints if you want to see if there's any complaints against any of the credit counselors. But yeah, credit counseling, you'll go to business resources and laws, online filing, and then credit counseling. Okay? Let me open back up the presentation. So are they licensed? Oh, 1, 2. Yes, are they licensed? That should be the #1 thing that you're concerned about. Do your research. As I mentioned, you can check those online reviews and complaints. Research the qualifications of the company and its employees if you're going with an overall company, and determine if the services fit your budget, right? You're paying for an additional service. If you're paying somebody to do something, it should fit within your budget, because that money could be going to paying your bills, right? Okay, so you want to make sure the services fit your budget and needs. And know your rights. So there are certain laws that credit counselors have to follow in South Carolina. They must provide a financial education program and analyze your credit before providing, before doing anything with your credit. They must provide you with a completely filled in contract, no blank spaces. If you are given a contract with blank spaces, that's a huge red flag. Do not sign anything. If the credit counselor is paying creditors, they must send you an account statement every 3 months. So know your rights. Do not just sign things because you don't know better, okay? And if you have any questions, call us. That's what we're here for, right? I keep telling you, like, don't hesitate to call us. That's what we're here for. We want you to call us. If you're thinking, I don't know, I feel kind of weird about this. They gave me a contract and I don't really understand this one part. We're here. Call us. You can even just call my office phone number. I'm going to give it to you in a second. And I may not be able to answer the credit counseling questions directly, but I'll get you over to legal and they most definitely will be able to answer your questions. And remember, you can cancel at any time by giving a 10-day written notice, and the credit counselor cannot charge you for canceling. There have been plenty of people in the past who will be like, oh, well, I'm going to charge you a cancellation fee. No, can't do that. And credit counselors and organizations cannot charge you more than the law allows. So there's current fee caps. They change. So go to our website so you can find out the current fee caps. And please know that there are so many scammers out there, and they are not, honestly, they have no shame. If you see a sign written in Sharpie on the side of the road offering credit repair, it is most likely a scam. Please pick up that sign and give us that information, because it's most likely a scam, okay? Or somebody who's not licensed, who should be licensed with us. If they're saying that they can erase your bad credit, they're not going to be able to. If they guarantee you anything, that's illegal. They can't guarantee you anything. If they claim they can remove bankruptcies, judgment liens, bad loans from your credit forever, that's a lie. They cannot do that. Legally, if the information is yours, it cannot be removed from your credit report unless it's past the statute of limitations. If it's yours, if it's accurate, and it's timely, it remains on your credit reports. And I think this is very important. If they tell you that they can create a new credit identity for you, it's because they're stealing somebody else's credit identity, and it's most likely a child's or a dead person's. So here are the red flags. They're going to pressure you to pay upfront fees. Simple rule, you don't pay upfront. They're going to tell you they can remove all negative information. No, no one can do this. And they're going to tell you not to contact the credit reporting companies or creditors. If you just signed up for a credit repair service, you have the right to cancel. So they're going to tell you to not contact them, and no, don't fall for these scammers. It's not worth it. Okay, we've had some questions come in. I paid off my auto loan early and only owe on my mortgage. I use 2 credit cards and pay off the balance each month. Why would my credit score go down? So the reason that your credit score could potentially go down, now this is just a theory. I don't know if this is exactly why it went down, but this is the theory. The reason is because of credit utilization, potentially. So you paid off your auto loan early, which means that your overall limits were brought down. So your utilization number has gone up, which means that your overall utilization number went from a lower number to a higher number. So that is potentially why your credit score went down, but it should recover over a certain period of time. I wouldn't worry too much about it, but that's one of the potential reasons, just because of your credit utilization. Are inquiries from insurance companies for auto or home considered hard or soft? They're soft inquiries. They're considered soft. How credible are the apps such as Credit Karma? So it's not that these apps aren't credible. They have credible information. They're also working with the credit reporting companies directly. We just caution consumers to read the contracts that they're getting into and know that the companies like Credit Karma and many other companies, it's not just them, are selling your information to third-party marketers. So you are going to get more pre-approvals for insurance and loans and credit cards and all that stuff. So just know that's how they're making a lot of their money, and through advertisements. Is there a charge for checking your credit report? Not the first time. So the first time's free. And then if you wanted to check through annualcreditreport.com again after that, so say next year, because I mean, you could check as many times as you wanted this year, but say it's a regular year and you've checked once at each of the credit reporting agencies next year, and you wanted to check again through annualcreditreport.com, it's a maximum charge of $12.50 per credit report through each of the credit reporting agencies. So that, yeah, it's a charge for checking your credit report after that first free one from each of them. If you co-sign, is that on a credit report? Great question. Yes, it is. That is going to show up on your credit report. Why is a person's money situation not as private as health? I don't quite understand the question, because I think a person's money situation is arguably as private as somebody's health. Maybe it's not as, I think maybe somebody's money situation is more visible because you can see, you know, people's money situation because you can see what they're buying and what they own, what car they drive, things like that. But in order to look at somebody's credit report, and this is something to mention also, if you are going to check your credit report anywhere, even on annualcreditreport.com, they are going to ask for your credit, your social security number, because that's how you access your credit report. That's your identifying information. So I got a very concerned phone call from a consumer, and I'm glad she was concerned. She said, well, I'm worried they were asking for my social security number. And I said, that's how they're verifying you are who you say you are. So in order to access that information, you need to verify your identity. So it's not like anyone could just access your credit report. Now, the reason that insurance companies, auto insurance companies and all, is because you technically are giving them access to that. You're agreeing in the terms and conditions to let them see that. And same thing goes for health. You oftentimes will get offers for health insurance or additional insurance on things or better. So, I mean, I would say they're pretty equal, to be honest. Does checking your credit score frequently lower it? No, that's a myth. So checking your credit score through annualcreditreport.com, which you can do, which you actually have to pay for, because your credit score and your credit report are not the same thing. They're separate items. When you check your credit report on annualcreditreport.com, you're not going to get your credit score. It's just your report. Now, if you're going through one of the credit reporting agencies, they offer your credit score, but know that they may also sell your information to third-party marketers, and you have to agree to that. So that's, again, why we always say annualcreditreport.com. No, it's not. When you're checking your credit score through, like, say, an app on your phone, so I have a Capital One credit card, and I can check my credit score through them right now. It's not my official credit score. It's just an estimation. Me checking that over and over again is not going to affect my score because it's not my official score. If I wanted to pull my official FICO score, my real score, I would actually have to go pay for it. or I'd have to go do a hard inquiry for like a mortgage loan or something like that. Somebody said, is it the same in every state? Could you clarify for what? Are you talking about the laws for credit counseling, I'm assuming? I'm assuming it's for credit counseling, and it is not the same in every state. Yeah, no. Okay, so you clarified the laws for credit counselors are not the same in every state. And one more question came in. It's a little bit longer, so let me read this just for a second before I read it out loud so I don't get it wrong. Okay. So I'm going to generalize this question. So it's about defaulting on a credit card, and it went to collections, and it was sold to debt collectors. How long can the debt be on your credit report? If you have no contact with the debt collectors, when does that debt ever come off of your report? Okay, so there's a misconception that once the debt is off of your report that you no longer owe on it. That's not necessarily true. I just want to put that out there. If the debt is yours and the debt is in your name, you owe it, unless it's charged off or the debt collector agrees to charge it off, or you work with a debt management company to some agreement on that debt. That debt will always be yours. Now, when it comes to the statute of limitations of how long that debt would be on your credit report, the average statute of limitations, I think, for credit is like 7 years. So this isn't strict, but the average is 7 years. But just because it falls off of your credit report doesn't mean it's gone forever. If that debt gets sold to another debt collector, it will come back on for another 7 years. Okay, so the moment that debt is renewed, or it's picked up by another company, it will come back on. So I think there's a common misconception that the moment debt is dropped off of a credit report that you no longer have to pay for it. If the debt is yours and it is open and active, you are expected to pay it. If it's a closed account, if it's closed and you've paid it and it drops off, it will drop off forever. Okay. If it is a debt that you owe and you haven't paid off, and it drops off, but another debt collector buys it, it will reactivate the statute of limitations and will come back on for most likely 7 years. Does that answer your question? Hopefully. Can you stop soft pulls? Looks like I'm assuming that's JP Morgan. It's a long acronym that I think is JP Morgan. Pulls the soft pull monthly. Okay, yeah. Doesn't matter. They're most likely pulling a soft pull monthly for a credit report. They're most likely sending you like a credit score or something. It doesn't matter. In my opinion, it doesn't matter because it's not affecting your credit. And you can actually opt out. This is actually a great opportunity for me to show you guys. Opt out pre-screen. You can opt out of all pre-screened offers. Look at this. optoutprescreen.com, guys. You can opt out of pre-screened offers. So This includes Innovis also, which is another credit reporting agencies. What this will do, this will opt you out of firm offers for 5 years, firm offers being these pre-approved offers. So this is electronically, and then also it gives you a bunch of other options. So you can opt in if you've opted out prior. And then you will have to give your social security number, date of birth, address, and name. So you will have to give over your information, but that's because in order for them to pre-screen you, they have to have your credit report information, right? So in order to match you up, if you're going to opt out, you can opt out for 5 years, opt out by mail permanently, so you don't get any credit or insurance offers by mail ever again. So if you don't want those, do it. I think it's fantastic. Okay. And this is real. This is a real thing. We tell people about this all the time. So go here, optoutprescreen.com. Go here. All right. And I think that was the last question. Let me make sure. Are medical collections still allowed to be shown on credit reports? Yes, they are. So I actually gave an entire presentation on the updates to medical reporting. I think back in July when it went into effect, and I believe we have it on our YouTube channel. We do. So if you go to SCDCA TV's YouTube channel, you could go to playlists and then webinars. I gave a whole webinar about what the actual rules of medical collections were on credit reports, because it's actually very limited. It didn't apply to all medical collections. It was to, I believe, if I remember correctly, it was like $250 and less. So if you, let me see, credit reporting updates for medical debt. Right here, it's number 14. This was me too. So you can watch that there if you're interested in that information. Of course, we're always over. I'm sorry for those of you who hate that, but you guys had fantastic questions. Thank you so much for staying with me. And we hope to see you in the coming weeks for our additional Wednesday webinars. Stay safe and healthy. We'll see you guys later. Bye.